What's up everybody? Welcome to the Stocks channel. My name is Corey and today we closed out the trading month of May as we continue to close above some of the recent breakout levels and we're very close to testing the next leg of resistance. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.56% and we did get the second day in a row closing above this resistance level at 408. And we are still seeing price action closing above 3 of our 4 moving averages. So from here, there are 2 likely possibilities, and we do have a doji candle, so the market is trying to figure out where it wants to go from here. And the first likelihood is that we come up here to test this resistance zone right around 420. And if we can see the bulls breaking above that level, we will have relatively quick trip to the next resistance zone around 430. But keep in mind, as long as this is a bear market with a strong bear trend, there will be a lot of bears waiting at these resistance levels. That doesn't guarantee that the bulls can't close above resistance, so you still need to watch the price action at that level and don't just assume price will fail at 420. Now the next possibility is that we come down to retest the breakout of our 20 simple moving average, which is currently down here right around 403. Because anytime you get a bullish breakout above a moving average that's as important as the 20 simple, it is possible we need to retest that level as support before we can go any higher. So if we do start to pull back, you're looking for strong support levels right around 408 and 403. And if we start losing that support at 403, I would get a lot more cautious of a possible next leg lower, because if we lose support at 403, we're likely coming down to retest our support trend line, which is still right around 393. Below 393, the risk of the next leg lower increases, and we could still make that next leg lower for price targets at 376 and 370. So watch this very critical zone right around 403, because that will likely be a pivot of whether or not we go higher or lower. And there is no guarantee that we have to come down and test that level now. We could start to see the 20 simple moving average curling up and then test that level as support at a later date and then make the attempt to break out above 420. So there's a lot of possibilities and a lot of scenarios. But right now in shorter time frames, the bulls are making higher highs and higher lows. So I would not completely write off the bulls because they are developing a bull trend on shorter time frames. And you could see on the daily chart, we did lose the bear trend because the 5 EMA is now above the 13 EMA. And the 13 EMA is above the 20 simple moving average. You can also see the 20 simple moving average is flattening out. So the bears did lose a lot of that downward momentum when there was a lot of downward pressure and it was very difficult for the bulls to go against that strong downtrend. That downtrend is now no longer as strong as it used to be. And the bears no longer have a very clear lower high, lower low situation. So the bulls are starting to battle back, and it's going to be a very critical month of June, because we are going to see in the month of June whether or not we make that next leg lower or start reversing from this low right around 381. On the NASDAQ 100 triple Qs, we were down 0.27%, and on the triple Qs, we did get the second daily close above 306, and as you can tell from this chart, that is a higher high from the previous daily high back on May 17th. So if you look at this chart on smaller time frames, you can clearly see higher highs and higher lows, but that doesn't guarantee that we're out of the woods just yet, because from a larger term downtrend, we are still making lower highs and lower lows. So watch these support levels at 306 and our 20 simple moving average at 301, because that will be the critical breakdown. If we do start to make the next leg lower, we will slice right through that 20 simple moving average and it will not act as support. However, if you see the bulls using that as support, we could still run up here to retest resistance at 318. And above 318, we can still make an attempt up here at resistance at 330, but there will be a lot of bears at those levels, so watch the price action very closely. Just like on SPY, the bulls are reversing the strong bear trend, but we still do have lower highs and lower lows on larger time frames, so you still need to respect the downtrend. If at any point we break down below 301, it is very likely we retest the low at 285, and if we break 285, you're looking for the next targets lower at 276.8 and 269.5. In the Dow Jones, we were down 0.56%, printing a perfect doji candle and testing the 50 EMA as resistance for the second day in a row and still getting rejected at that level. So I continue to tell you the bears will not just roll over and give up easily without a fight, so you will see bears at this strong resistance zone at 333. And if the bulls do manage to close above 333, there will still be a lot of bears waiting up here at 340. Above 340, we will likely scare away the bears and go close that gap at 347. But don't look too far ahead because we still have very strong resistance at 333. Downside support for the bulls will be here at 326 and our 20 simple moving average right around 324. and that gap closed right around 322. If we lose all of the support in the 320s, we could come all the way back down to retest the lows at 310 and 308. So be very cautious if we start to lose this support zone. On the Russell 2000 IWM ETF, we were down 1.24%, and the Russell 2000 is still closing above this support zone right around 183. So watch support at 183 and right around 180. And if we break below 180, you're looking for a retest of the low at 175. And below 175 will very likely fill that gap at 165.7. The next bullish breakout will be a close above the 50 EMA at 189. And bullish breakout will be a close above about 192. So watch those very critical resistance levels, because if we do get a bullish breakout, it could show that the small caps are leading the way higher. On the ARKK ETF, we were down 2.91%, and we did get the second day in a row closing above the 20 simple moving average. So this is a relatively bullish development in the short term, but we cannot get bullish on the ARKK ETF until we start closing above 52. This is a very strong bear market, so do not get bullish below 52, even though we might come up here and retest resistance at 47 or the resistance trend line right around 50. If at any point we lose support at 43, look for a retest of the lows at 40 to about 39. And below 39 will likely hit that price target at 33.7. On the VIX, we were down 1.32%, and we continue to see the VIX struggling to break out, with the VIX continuing to get crushed and closing near the low of the day. And we can now see all of these moving averages on the VIX are negatively sloping. So the next bullish development will be the VIX closing below 25 and then below 24. As long as the VIX is above 24, there is still going to be the possibility that we get a spike back above 30. And that will go hand in hand with a continuation of the bear market in the next leg lower. So watch those critical support zones around 25 to 24 and get a lot more cautious if the VIX spikes above 30. On Bitcoin, we're currently trading just under 32,000, which is a resistance zone, and we are bouncing off of that support zone at 28,000. Some of our moving averages are curling back up, and we are seeing some bullish momentum, and we are seeing some relatively high volume buying. And this is what I was expecting to see off of this support zone. So the question from here is, can we get this breakout above 32,000 and go test that resistance at 37,000? And you're looking for the bullish breakout on a close above 40,000. Now keep in mind, if we get rejected from this resistance right around 32,000, we can still come all the way back down to support. So don't be getting overly bullish just yet. And we could still bounce off our 20 simple moving average, which will be right around 30,000. If at any point we lose that support zone at 28,000, you're looking for a retest of this low at 25,000. And then below 25,000, it's very likely we'll go hit the price target at 20,000. So things are looking relatively bullish in the short term, but we're not out of the woods yet, and there's still some upside resistance we need to clear. So if you are buying at this level, your risk is still at 28,000. On NVIDIA stock, we were down 0.74%, and it does look like NVIDIA is confirming this double bottom breakout, which means we should see NVIDIA running back up here to retest resistance right around $200. And while we're there, we could see NVIDIA test that very critical resistance at 210. And above 210, we'll be getting a lot more bullish for these gap fills above. So we're getting a lot more bullish if NVIDIA can close above 200 to 210. But there's still the possibility we get rejected from resistance and come back down to retest support right around 178. So get a lot more cautious if we do lose that support at 178. Below 178, it's still possible we hit that price target at 150. But it is going to be a very strong support zone. If the bulls are out there, they should be buying at that level. So watch these two levels very closely. On Tesla stock, we were down 0.18%, closing right on top of the 20 simple moving average and not closing above that resistance at 762. So we do see Tesla closing at a very strong resistance. But if we do close above that resistance, it is very likely we come back up to retest the 50 EMA, which is currently sitting at 841. Above 841, we have that very strong resistance at 900. So right now, those would be the two most critical resistance levels that I would be paying attention to. If we see Tesla selling off from resistance, you're looking for a retest of support at 700. And if we break that support at 700, look for a retest of the low at 620. On Apple stock, we were down 0.53%, and we see Apple did close back over the 20 simple moving average for the second day in a row, but failed to close above resistance at 150. If we lose this support at the 20 simple moving average, which is currently at 148, look for this gap fill below at 144, and below 144 will likely retest support at 137. If we lose support at 137, it's still possible we hit the price target at 130. But the bullish breakout at this point will be a close above 155 to 156. So if we start to see Apple closing above 156, that will be the bullish breakout and we will completely lose the bear trend. In the financial sector, we were down 0.28% as the financial sector is trying to break out back over the 50 EMA. So if we do get the bullish breakout, it will be the close above about 35.6 Otherwise, look for a rejection and come down here to close the gap at 34 and retest support. On the industrial sector, we were down 0.81% as we did get the third day in a row closing back over the 20 simple moving average. So the next step for the bulls will be testing resistance at the 50 EMA, and it will be a bullish breakout if we do close above that level. On the healthcare sector, we were down 1.34% as we are getting confirmation of the bullish breakout closing back over all the moving averages and above our resistance trend line. So from here, we could start to see the healthcare sector starting to develop a bull trend. On the energy sector, we were down 1.5%, and the energy sector did hit that price target at $90, and we did see a very strong rejection from that level, and there are plenty of gaps to the downside that still need to be filled. So be very cautious if you are buying energy at these levels because it could be very near a topping process and due for a correction. You'll know we're going higher in this bull market if we do start to bounce off some of this support below, so watch these levels closely, but get a lot more cautious if we do start breaking through support, with the most critical support being the 20 simple moving average. So jumping back over to the S&P 500, we are still in a downtrend in the larger time frames, but in the smaller time frames, we are starting to see higher highs and higher lows. And that's exactly what you would expect to see in a counter trend rally. If we start to get bullish breakouts above some of this critical resistance and start forming higher highs and higher lows on the daily chart, then we can start to say we possibly saw a bottom and we're getting out of the bear market. But it is way too soon to say that the market bottomed and we're not going down for another leg lower. So use great risk management, and you still need to be very cautious in this elevated volatility, because anything can happen from these resistance levels. So you need to make sure you're prepared for any scenario, whether we get the bullish breakout or we continue to go down for another leg lower. Don't get caught off guard. Go make your plan now and make sure you have a very objective plan on how you're going to trade the market no matter where we go from here. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.